What's happening, guys? And welcome back to another Sunday Scan. We have had an action-packed week, and we have lots to talk about. And really, what we've seen over the last week or so, especially in the last few days on Friday, is a big shift in momentum from what was a really speculatively hot market, tons of things going up, to really some risk-off signals happening, and the market pulling in a little bit. So when I was looking for who could be the best person to talk about something like that, Stockbee, Pradeep Bonde was really the person who came to mind. So Pradeep is going to join us on Sunday Scam, and he's going to talk about that shift in momentum, what he's looking at, and then we're going to go over in detail some stocks that we have on watch for the week ahead. So make sure that you stay until the end of the episode, and make sure that you leave a like, subscribe, and comment on this video. Any key takeaways or anything that you want us to talk about in the future, or any guests that you want us to have on Sunday Scam. Before we get into things, we also have a Traders for a Cause event happening in Toronto on August 13th. So if you are in that area, or if you are interested in attending, we will link to tickets to that, but that'll be a fantastic event to attend. I will give the disclaimer now that neither Pradeep nor I are financial advisors, and these are not buy or sell recommendations. Everything that we're going to talk about is for educational and informational purposes only. Now let's bring on Pradeep. Pradeep, welcome to Sunday Scan. And I always joke that you're like the king of momentum. And, I've been wanting to have you on Sunday Scan. The market's been hot. There's been so many things in play. And then Friday, we get this big, flush in momentum. Everything kind of, takes a pause. We had some job numbers. We had some things with tariffs and everything else. So have you felt a real momentum shift over the last couple of days? And then, how are you measuring that, or how are you thinking about that?
So there has been a shift in momentum happening slowly, basically, right? And it's a gradual momentum which shifted, but there are signs of momentum shifting. And let me pull my screen. And if you pull my screen, you can see that I have this indicator, which is like the number of stocks which are up like 20% plus in 5 days, and number of stocks which are down 20% plus in 5 days. And if you see, typically when it goes above this moving average, or it reaches around 100, typically that kind of in the sense of momentum, like just what you're looking at is a breadth, right? And it's a breadth. Excessively bullish breadth tends to lead to a pullback. So if you go back and see, when there was an excessively bullish breadth, within a couple of days there was a pullback, right? Whenever there is a excessively bullish breadth goes above 100 and all, like 100 plus stocks in a week are about 20% plus, or above 20% plus, you see a small pullback. So this reading had reached excessive reading at around Wednesday, when it was above 100. It was 104. So that was a first sign that there is too much momentum, because too much momentum is also not good, right? And basically, when there is too much momentum, there is opportunity to make a lot of money. But I always say to people, look, when there is too much momentum, you have to be with one leg on the exit. You should stay the party as long as possible, but your one leg should be at the exit, so that the moment you see a shift in momentum, you should be out, right? So this is one thing which was indicating there was a shift in momentum. The other thing which was indicating shift in momentum is and if I show you this, right, this is the market monitor which I publish every day, right? So you will see that 728, 4 or 5 days, even before yesterday's sell-off, or Monday's sell-off, Friday's sell-off, you had continuously the breadth was negative. And then I have this indicator which looks at number of stocks up 13% in 34 days, which went bearish on Thursday itself, right? And basically, so there was signs that things were deteriorating slowly. And that's why I wasn't really long anything. I was looking at charts, and as of now, everything which I have is a short position because of that.
Wow, amazing. Yeah. And, I feel like going back to what you're talking about, how when you have the overly bullish sentiment, momentum, you start to see signs like a lot of the high short interest stocks starts to squeeze out. You have indiscriminate buying, you have indiscriminate covering by shorts. Last week we had some the meme craze come back with OPEN and KSS. And those are almost always good signs that the froth is really getting going. So like you said, having one leg out at the door at the party, but those are really good signs to tell for those turning points.
Yeah, means like yeah, if you see again, go back to my screen. If you go to my screen, you will see that monitor these high short interest stocks, and you had stocks like KSS making this kind of crazy moves in 2 days, like 83 and 90. And like if you've been to Coles, right, it's not something which is going to go up 90%. Their business is not really doing on. You had like bunch of these stocks, and which were like which was one of the reason why I was like skeptical that we'll have a continuous rally, because you have these stocks like space and all, which like are complete like in a fraud, right? Or means like fraud, or they don't have any business to be going up 100 200% or 90% in a week or something. And they were all suddenly came into play, like you have like in stocks like PLC in one day, which like an event of 32%. So when you see something which is too good to be true, or American Eagle Outfitter, right? And basically, so when you see things, yeah, means if you have been around in the market for some years, there is something which is means like it's like I was just last week or a couple of days ago, I was in uh, Turks and Caicos Island, and we went on a boat for like to see sharks, right? And basically, and we were in the water, and nothing was like showing. And then the captain of the boat, he says, "Look, in next 5 minutes, the sharks are going to come." And I asked him later, "How do you know this?" He says, "There are these fish which come in before the shark comes in. They are like pilot fish, right? And basically, or the canary in the coal mine kind of a thing, right?" So same way, when you see things like these American Eagle Outfitters who have a falling business, or calls and PLC and high short interest plays making big moves, that's like sharks are going to come in a couple of minutes, right?
Yeah, definitely. And something that I talked about last week is that when
Mm,
you see these types of moves too, you can always tell that there's a turning point coming, because after the big spike, they bring it back. And so
mhm,
I think that there's a difference. So sometimes in like remember during COVID, you would have these big short squeezes, but then
mhm,
they would hold and they would
mhm,
build, and there would more,
mhm,
demand
mhm,
coming up. So that's like a super amount of momentum that's holding,
mhm,
versus momentum that it's clearing out all that short interest, everyone
mhm,
covers, and it goes right back down. So
mhm,
it's a sign
mhm,
that there's not enough demand to
mhm,
hold that momentum
mhm,
forward. So those are really good times. And then
mhm,
we also have earnings season
mhm,
happening, and we've had some, big moves up, and then
mhm,
some big retraces too. So like
mhm,
I've been seeing like the sectors, the names that have been holding are like the AI power stocks,
mhm,
things like that. They spike up, but then they come back down. They
mhm,
hold pretty well,
mhm,
versus something like KSS or some of these
mhm,
others that, yeah, they have that big spike, but they
mhm,
immediately bring it because
mhm,
there's no secondary layer of demand to hold
mhm,
it.
mhm. Yeah, the charts are driving the moves, or squeezes are driving the moves on those. There is no real demand, and they started fading next day or second day, right? And COVID was a special time. Basically, there was too much liquidity in the market. Uh, Trying to recreate the same thing is was not really going to work. And as you said, like in the earning season, also when the earning season starts, I always like look at themes, because earning season has a theme, right? And in this earning season, there are very few stocks which actually reacted positively to earnings and went up. Most of the stocks which reacted, which had good earnings, they also like didn't really go up much. Like you have Microsoft, on the day of the earnings, they gapped up, and then they end up giving up all the gains, or so many stocks, right? And when you watch earning season, in the first few days of earning season, there is a theme to this earning season. And the theme to this earning season was that all the stocks had rallied so much into earnings. They were up like even the larger stocks were up 30-35% into earnings, and some stocks were up, they're doubled tripled into earnings. And then they really need to do something extraordinary, or they need to be have like earnings which are like phenomenal to make any more moves. And that was another sign, which was that there is some change in momentum. These are all subtle signs you have to look for to not get caught by surprise.
Yeah, definitely. And then another big theme that's been in the market over the last month or two has been really like the crypto stocks.
Mm-hmm.
You obviously had the big breakout in Bitcoin from
Mm-hmm.
110, 112 all the way up to
Mm-hmm.
the 120s. And
Mm-hmm.
then Ethereum was running. You had all the Bitcoin treasury plays, Ethereum
Mm-hmm.
treasury plays, and so that was another sign that like if that has been one of the main sectors that's been driving kind of the
Mm-hmm.
speculative mania, you had a big crypto pullback that just
Mm-hmm.
happened. And now you're starting to see all those companies, really fall apart. The
Mm-hmm.
SBET, BMNR,
Mm-hmm.
obviously they already had their big capitulation, but
Mm-hmm.
now, after consolidating, they're breaking down further.
Breaking down,
So,
yeah, yeah.
yeah.
Mara, Riot, even MicroStrategy, they're all like breaking
Mhm.
down. Not
Yeah.
only that, the biggest tail is the like semiconductors, right? ASML earnings was the actually ASML earnings. If you see ASML, the moment ASML earnings came in, and it like guided down, and like since then you see all the semiconductors. They are like down, right? And in fact, my watch list for next week is full of these kind of stocks, which are like basically reacted negatively to earnings, and they will have a follow through or a delayed reaction to earnings to the downside probably.
Yeah, and then we also have the new tariff risk kind of
Mhm,
introduced a little bit back into the
mhm,
market. So
mhm,
obviously back in April or whenever it was, we had the surprise announcement. It was
mhm,
super aggressive.
mhm,
Went down a ton. Then they kind of capitulated. They had to
mhm,
reverse because it wasn't doing what they thought it would do.
mhm,
And now you're kind of doing like the soft version 2.0, where
mhm,
okay, they're trying it again, but
mhm,
much less aggressive. They're being very easy on China and some
mhm,
other big economies. So
mhm,
I do think that tariffs are moving the market a little bit, but
mhm,
definitely not to the extent before. But I think that it's just the combination of too much momentum, speculative mania, and now you have at least some risk factors coming back. That's
mhm,
enough to make people think twice, take some profits on some big
mhm.
winners, and then really be a little bit more focused about where they put their money.
Yes, exactly. Means like uh, the other indicator which I have, besides like these indicators which are market based and all, is the number of emails which I get from people and the calls which you get from people, right? And that also tells me what is happening in the market, right? Everybody is like now bullish. So they were not bullish in April or May when there was a correction in the market, and now suddenly you have a bunch of people who want to put all their account in some stock, or they're like very bullish on the crypto or things like that. So um,
Yeah, and on that topic, I think it was our friend Ariel had a
mhm,
really good quote. I think it was him. He was saying that basically, as like using the party analogy, as the party goes on, a lot of people, because they've been making money, they
mhm,
double up, they go
mhm,
bigger,
mhm,
they
mhm,
make more, they want to do everything like that.
mhm,
But it's really as the cycle goes on, that's the time to start reducing size, to being a
mhm,
little bit more cautious, to
mhm,
tightening up stops. And so, like, as a professional, as these things go on, you're reducing size, reducing risk along the way.
mhm,
Whereas, the non-professional people, they're doubling up and they're going more aggressive right as
mhm.
the party is about to end.
And that is the reason why they don't keep the money which they make, right? And I mean, I was that kind of a person in the beginning, first 4 or 5 years, and then you realize, I've been in this business for 25 years. You've seen these up cycles and down cycles. So then you realize next time, you should not overstay the party, and you should keep the money, right? And so that's a learning which takes people 2 cycles or 3 cycles if they're lucky, to realize. First cycle they don't realize, second cycle they have greater appreciation, third time they're lucky for it, they are ready for it basically.
Yeah. And then you were saying that, as the momentum shifts, you're really looking at more of like a short bias for some of these
Mm,
things. So
mhm.
when you're thinking about some of your short setups, could you lay out that framework for us? Are you looking for kind of bearish trends? Are you looking for like reversals of overextended names? Like how do you go about your setups there?
For shorts, right? And I always look for something which has a reason to go down, right? And there has to be some catalyst, because most of the time, if you short something just based on momentum, it may not go down. If the market is good, it just stays there, or it like and it just rallies and all. So I look for like some sort of a reason why it should be going down, right? And all the shorts which I put in recent days, like, and if I go back to my screen, right, this is a stock which I shorted, right? So here, there was a clear breakdown, right? And the volume was 30 million. And if you see, like, say, if you see on something different, right? And basically, you'll see the highest volume traded in last 5 years or 6 years, right? And this is a stock which is not even a retail trader's favorite stock or things like that, right? And this is a institutional quality stock owned by 2,500 mutual funds and all. So 30 million shares were sold on this day. I didn't short it on this day, but I analyzed why it was down, and the guidance and everything. So I was waited and I shorted this on this particular day, basically, right? So this is one of my shots, which was like, again, there was a clear catalyst. The second shot which I have is Mu Micron. Again, like, say, there was a big catalyst here, and it like, and it went down, and then again, on Thursday, it had a like a negative momentum, and then I shorted it on this. Again, Soxel is my biggest short, which was like, again, very clear, because I could see all the semiconductor stocks were breaking down after earnings. You had like ASML, which were like, and I had like ASML short, right? And basically, you had like Qualcomm. All of these stocks were just reacting negatively to software, like in a semiconductor stocks. So that's why Soxel had a reason to go down, right? And the things which I'm watching currently are also the things which have a catalyst, and after the catalyst they have like rallied a little bit, or they had a reason where they are likely to go down, right? And I hear, like, say, this is again like 3 or 4 days ago, but Wells Fargo came out with earnings were like, and they guided down earnings, high volume breakdown, right? And then there are these people who always buy on these kind of things, and they're buying get over, and this is where, like, the stock started going down. And for a large stocks of that size, 7-8% down is a big move, right? And basically, so I always look for, when I'm looking for a short, some sort of a catalyst. And I always short something which has a delayed reaction. I don't short immediately, because if you short immediately, this is what happens, right? And it tends to bounce back. And once the bounce is over, even in the case of Texas Instrument, I waited for the bounce to play itself out. And on this day, I was watching, and then I shorted it. So everything which I'm going to short is going to be something where there is a big volume breakdown on a catalyst, and then some sort of a small reaction, weak rally. And when the weak rally starts fading, or the weak rally starts showing signs of weakness, is where I shot them.
Yeah, I think that that's just such a key concept too, of like, a lot of people, especially on an intraday basis, as soon as something starts to break down, they hammer in, it soaks right back up. So like, looking at a multi-day time frame, basically what you're looking for is some kind of almost like a bear flag, or whatever people want to call them, where it goes down, and then basically, okay, how far does it go back up? And then when it starts to reject, and then you kind of see, okay, it's put in a lower high, and now it's acting weak, you have a level to risk off of. And now, like you said, you can see that increased selling volume. That is so key. So, initial move down, the market takes a little bit of time to decide. And then, when selling comes back in, and it's really showing that with volume, you have a much better risk reward there. And you can be more patient too, as opposed to just breaking news or whatever it is, and then hammering in. You can wait for these. And if, the market's weak, you have the sector, you have that catalyst, you have the technicals confirm, the volume confirm along with it. It's really just like the path of least resistance down, as opposed to fighting just a really, trending stock with, that can keep going for, weeks or months.
Yeah, that means the day traders have a different way of looking at it, and they have a different way of shorting stocks. But as a swing trader, I have a different way of looking at it, because I don't want to be the first to do it. I want to be like in the second reaction, because then the catalyst, there was a real big volume selling, and then you can go and do it. In addition to this kind of a real catalyst thing, I'm also looking at stocks which have made big moves in the last 2 months. Anything which is up 50% is on my list of things if there is a setup to short currently.
Yeah, that makes perfect sense. Things that are overextended. So that's like another setup. So instead of just the swing trading for the breakdowns with catalysts, also things that are more mean reverting. So yeah, I mean, even I haven't pulled it up, but even something like CVNA almost comes to mind with that, where it's like, big run up into earnings, everything like that. And now it's starting to pull in a little bit.
Yeah. So I also have a scan which I run, which is like I look for a stock which is up 50% in last 40 days. So it has gone up 50% plus in last 40 days. And then if you look at it, the stocks, there are like around 377 stocks which are up like 50% plus in last 40 days in the last 1 month. And you see some of these are starting to break down. And then I wait for them to have like an, so here is a good example. This stock had rallied almost 50%, right? And the earnings came in, and then it has broken down, and the volume is one of the highest volume. Now, if it has a weak rally, this will be the stock which I would short, because I know the catalyst. I know that this has like got a really big dumping by the institutions, right? So that's, and also because it has gone up a lot, you have to short something which has gone up a lot and not a stock which is weak, because the weak stocks, like if you try and short United Health or something like that, there are people who are value investors who are trying to buy it, right? But this kind of a stocks, there are a lot of people who are invested in this stock, and once their stops start getting hit, it's a cascading effect and you get a fast reaction down. So I always like to short something which is extended and then it starts breaking down. That's a better way to short to me, rather than to short a weak stock.
Excellent. So, yeah, Pradeep, what are a couple of names or themes that you really have on watch for the upcoming week? Are you going, looking for both longs and shorts, or as
Mhm.
long as the market's weak, just focusing more on the short basket for right now? And then if the market turns around, you go back to your kind of default long strategies.
I have both long and short ideas for next week. I already did the work like for this, and if you see what I have is I have a couple of ideas where there is a earnings as a catalyst, and those stocks had positive earnings in the last 3, 4, 5 days, but because of the market conditions, they're just sitting there, or they didn't react as positively. So I'm waiting for them to set up as a delayed reaction kind of a EP. And then I have shorts currently. So I have around, like if you go to my screen, I have around 8 stocks which I am watching, right? So something like this, I'm just watching it as a possible breakout to the upside, basically, because it has good earnings and sales and all. So like, but earnings is coming out on 8.5. So, but here is a good example of a stock which I'm watching very keenly, right? This had earnings. The stock reacted positively to earnings, and it is pulling back on a low volume. And if it sets up, it has a very good catalyst based on a catalyst and things like that. It has 15 billion order over last 10 years, which is a big catalyst for that size stock. Capitalization is only 3 billion, right? So I'm watching this for possible bullish entry on any breakout, or if it starts showing strength, right? On the short side, I'm watching Qualcomm, because there is like an big volume sell off 1 or 2 days, like, and if there is a rally similar to Texas Instrument. Now this is my A1 idea which I am watching, right? Here Johnson Control came out with earnings, and there was a negative reaction, big volume selling, and this is a stock which is fairly large stock. Capitalization is 69 billion. So I know this selling is institutional selling, right? So I'm just waiting for a negative candle on this, a negative day, and I'll take a shot on this. So that's one of the stocks which I'm watching. I'm watching AMAT for the same reason that I am short TXA and I am short Moo and all these same exactly reason, right? And there are these, after earnings, they had a negative reaction, little bit of a rally. If this is a rally starts fading, I would short this. LRCX, same thing, right? Volume, big volume selling here after a big rally. Stock had rallied for that size of a stock, 68%, 60% rally for 121 billion is a big rally, and then negative catalyst. So I'm waiting for this to show some signs of weakness, and I will chart that. Similarly, Spotify, very high volume breakdown, right? And basically, so if it starts like in a breaking down, I would look at it. And this is another stock which I'm watching for to go on the long side, because this had a good catalyst, very good earnings. Earnings was very good, but I didn't buy it here today because I know a lot of earnings are getting faded. So I would wait for, say, a reaction like this on this stock, and I would buy on a breakout like this on this if there is a small pullback. So these are the stocks which are both long and short. Like this is like couple of longs which I'm looking for applied and Reddit. Both had catalyst. Also, I also have like one more Transmedics, which I didn't put in here, which is another one which I'm watching, which had a positive earnings, good earnings. If it sets up nicely, I would want to be in that particular thing. On the short side, obviously Qualcomm, JCI, I'm at. These are for next week, and there are a lot of stocks which broke down last week. So I'm just waiting for them to have some sort of a bearish flag or some sort of a counter trend rally, weak counter trend rally. I'll watch the weak counter trend rally on things like coin or like some of these kind of plays, right? And if there is a weak rally and I see signs of that weak rally starting to fade, I will be short a lot of these stocks. There are a bunch of stocks which have had this huge volume breakdown in the last 5 days, and they are all on my watch list in case they rally and the rally is weak.
Yeah, those are excellent, Pradeep. And yeah, I mean, with coin in particular too, really, there was so much expectation for its earnings that it missed on earnings, sales, and you have crypto pulling in. So, if it's missing on earnings and sales after the crypto run that we've just had, then that's a good sign that people's expectations are too high and it's getting repriced. And even like other names like MSTR, I think, what a lot of people are not realizing about something like this is that even though, on the way up, the technicals might look pretty good, the structure of MSTR is that they sell so much. Basically, they're selling like upside calls on their own stock, just in different formats. So with preferred stock, with convertibles, with everything like that, it really dampens the upside. But as soon as you have a pull on the downside, it really, gets hit hard. So I think that MSTR is uniquely asymmetric, where it's extra sensitive to the downside and it's becoming less and less sensitive to the upside. So MSTR had a nice unwind coming back to some of these key levels. But I think if we see any more pull in Bitcoin, this is really going to get hit hard, because especially if they've been such a main driver of Bitcoin with their buying, that if for any reason they have to slow that down, or there's not as much demand for their preferreds, then this can be a name that can get hit hard. So again, not anticipating a massive move, but if I observe Bitcoin pulling, I think that this will be a go-to name for some unwind. And then some of the AI power stocks, like we mentioned, have really had some relative strength. GEV, VST, and also another thing with GEV, some of these stocks, they're more utilities, and when volatility gets raised, a lot of times people flow money into the utility sector. So it's just a confluence of factors of possibly why they're showing some strength. And then this name, BE, has been on my radar for a couple of weeks, more as like a swing thesis. And they had a big AI power agreement with Oracle. And so you can see that they're kind of pushing towards highs. They had earnings, they dipped, and then they ripped right back up. And it's just a sign that there's a lot of strength and demand kind of supporting a move like this. So I think BE could have some more continuation to the upside. We mentioned, UNH, this is a unique name. You can see the big, capitulation here, the big consolidation. The market had lots of time to think, and that breakdown with volume under that capitulation level, which can trigger a lot of stocks. So Pradeep was bringing up that this is a little bit tricky to short, just because it's a little bit slow moving. But I've found that it's been very good for put options, and I'm, a majority options trader most of the time with some of these names. So I've had some really good trades with puts as this has been breaking down. And I think that, into the upcoming week, we could potentially have some kind of big sell-off and capitulation, maybe into like that 200 level or 215. And if you look back at some of these historical levels, pulling into something like this, I think could be reasonable. So, on the option side, that has my attention, definitely. So as it breaks down, as it capitulates into that level, you see the volume increasing. Eventually, it'll hit a catching point where shorts get a little bit overzealous, and it starts to go the other way, and you could have a big bounce that I think people could participate in. And then just a few other names, like Apple had a negative earnings reaction, and they had positive, they beat on earnings and sales for this quarter. But I think really the issue is that their growth is not what it used to be. And, basically on good news like that, people are cashing out while they still can, instead of waiting for that really bad quarter. Because if you compare the growth, the earnings and everything of Apple compared to NVIDIA or some of these others, some of the other names are growing.
It's a dead money. It's a dead money.
Yeah,
Apple is a dead money, but they keep buying their stock. So much of their stock they keep buying. That's why it is still holding. But I think it's just a dead money.
Yeah. It's so expensive compared to the growth and what you get for it. So I would actually, I would think that the next time Berkshire does a 13F filing, I could see Buffett just selling out
Mhm.
quarter after quarter
Mhm.
and really taking his profits on a name like that. So I think if the market stays weak, Apple will be one of the leading FANG names or the Mag 7 names
Mhm.
on the downside. And then just a couple others that I don't have a strong game plan for,
Mhm.
but like Pradeep was mentioning, things like eBay, like these,
Mhm.
like Reddit,
Yeah.
these names that have had good earnings and they're
Very
holding
good
well.
earnings for the kind of stock
Yes.
eBay is. It was a very good earnings. So these stocks, some of these stocks, I would say that it will take 5 to 10 days for them to set up, because the market weakness is going to lead to some sort of a low volume pullback, and then they will have a reaction basically.
Yeah, I totally agree. And so
Mhm.
just kind of being patient,
Mhm.
understanding the market environment, those breadth indicators,
Mhm.
and then just looking what's the path of least resistance. Is it a swing short? Is it a day trade short? Is it something with options? Is it something that's holding well? Does the market turn around? And just having a wide variety of
Mhm.
setups and situations depending on what the market does. And then instead of forcing a bias or forcing a setup, just letting the market pull you into what
Mhm.
makes sense for you.
Yeah, sure. That means like, and it's a patience game. August, September tend to be a slower months also, because a lot of people go on holidays and things like that. But there are always opportunities for a swings. There are always opportunity. I think in a lot of stocks which had gone these crazy moves, they have made 50% plus in last 40 days. One by one, the dominoes is going to collapse, right? And so it's just a question of you having patience and not going where your risk reward is not in your favor. I had like this TXN, I was watching, and I put this short in with a risk of like less than 1%, right? So this day when it was negative, midday I put in, so my risk was even less than 0.5%. And then just like it just clearly in 3 days, like, and it just goes, and there is nothing to do. You just like have a very high I had a big position in this with a very tiny risk, and that's the ideal setup. I don't think any people, some of the people I told them also, don't chase the shorts. Wait for them to set up with a very good risk reward and then go. Because shorts you can get squeezed for no reason. Monday the stock market can gap up because Trump says something, right? And then you get screwed. You'd rather wait for that real low risk point entry on some of these shorts, and there'll be a lot of them. There'll be bunch of them in the next 1 or 2 weeks.
Yeah, I totally agree with that. And
Mhm.
just having that huge reward to risk ratio,
Mhm.
it makes up for so many mistakes. Because even if
Mhm.
someone's only right half the time, but when you're winning, you're winning
Mhm.
5 times the amount that you're
Mhm.
losing. Just the expected value of that is just such. It's the math is working in
Mhm.
your favor as
Mhm.
opposed to these 50-50. Oh well,
Mhm.
I win one, I lose one.
Mhm.
It's such a different
Mhm.
game.
Mhm. Yeah,
Yeah, definitely. Well, Pradeep, thank you so much. I really
no
enjoyed
problem.
hearing some of
Thanks.
your watches and
Mhm.
any kind of closing thoughts for the week ahead for people preparing.
I think, and I mean, this is a educated guess. There is no guarantee in this business. I think we are headed for a 3 to 5% correction in the market, which will probably last for a couple of weeks. Nowadays, the corrections tends to be very sharp and very fast, unlike what previously used to happen. But we are headed for 3 to 5, at least 5% kind of a correction in my judgment, and based on what I see in breadth and what I see in individual setups, basically.
Yeah, and then one of my favorite quotes of yours is that when we've talked previously, you really say that if you're more of a long bias trader, every day you're asking the question is this are breakouts likely to work?
Likely to work.
Yes.
Yeah.
Yes. Is it likely to
Mhm.
work? And if we're in a correction or something like that, then maybe it's flipping that to are
Mhm.
breakdowns likely to
Mhm.
work? And you're really just aligning yourself with the market.
Mhm. Mhm. Exactly. Like Thursday, Friday, I said like breakouts are not likely to work. What is likely to work is breakdowns. So I'm going to focus my attention on breakdowns. Sometimes because of that, I didn't take Reddit, even though the catalyst was good, because I was like in a very clear in my situational awareness, breakouts are not likely to work, right? And basically, so but like shorts, every single short which I touched in the last 2 days has worked like a charm. So it's having that situational awareness is so critical also.
Definitely. Well, thank you so much, my friend.
Mhm.
It's always great to chat with
Thank
you,
you.
and I look forward to seeing you in the week ahead.
Sure. Okay.
All
Thank
right.
you.
Thank you. Thank you everyone for watching. If you want to trade live alongside me and other members of the Investors Underground community, then check out investorsunderground.com to see if becoming a member is the right decision for you. They have some of the best technology and a lot of great members there, all looking to help other people improve their trading. And also check out Investors Underground content on YouTube and Twitter. Thank you.